Hey traders, Gavin McMaster here from Options Trading IQ doing a video collaboration with Barchart. And today we're going to be looking at how to find winning option trades using Barchart tools. There's plenty of tools available on Barchart. I'm going to walk you through my favorite ones, how I use them each day, and some of the process that I go through. Before we start, just a quick reminder that everything discussed is for educational purposes only, is general in nature and does not take into account your personal circumstances. So the first thing I do each day is come across and go to the stock screener to find some potential trade ideas. I have quite a few saved screeners here, but I'm just going to go through a few of them with you today. Some of the main ones I use is this 20-day moving average screener. I'm going to filter for anything with call volume above 2,000, market cap above 40 billion, and I'm leaving selected buy and sell. So I'm going to see stocks that are breaking above and below the 20-day moving average. I've also got a column here for IV percentile and latest earnings date, but I'm just leaving those filters blank. Reason being they'll show up when I see the results, and it's important information for me to know the IV percentile and the earnings date. So let's have a look at the results. Once I get the results, the first thing I do is I sort by the actual signal. So we're getting lots of buy signals here. If I scroll down, we're getting a few sell signals, but mostly buys. So this gives me an overall feel of the structure of the market. So when we're getting lots of buy signals, that's a very strong market. If we're starting to get lots of sell signals, that can be a sign of the market weakening a little bit. So that's the first thing I'll do. Then I'll come and filter or sort by the call volume. And this is going to show me the most active stocks in terms of the options. So they're going to be the best ones for trading options in terms of the liquidity and the bid-ask spread. As you can see, popular names such as Tesla, Amazon, Walmart, etc. So we're getting a buy signal on Tesla, a sell signal on Amazon, buy signal on Walmart. The next thing I want to do is check a few things on the particular stock. So we'll start with Tesla. I'll open this in a new tab. And we were getting a buy signal. And the first thing I want to do is see if that's being confirmed by the options flow, which in this case, even though we got the buy signal today, we're seeing negative trade sentiment and also negative delta imbalance. So doesn't necessarily mean I won't trade Tesla from the bullish side, but I'd probably prefer to find something that has positive flow as well. So if we go back to our results table, I'm going to look at the next one that has a buy signal, and that's Walmart. And if I go to options flow, in this case, we've got slightly bullish sentiment, which is good. So that's maybe a better candidate for a bullish trade. I'll also just have a quick look at the chart. And here we can see that breakout above the 20-day moving average is also breaking above the 50-day moving average, and a very bullish candle. So there's a great candidate for a bullish option trade. The other thing I'll look at on the chart is this accumulation distribution indicator. This just kind of tells me, is the stock being accumulated or bought, or are people selling the stock, or is it being distributed? And at the moment, that line's trending in the right direction. It's quite positive. So that's very, very strong underlying momentum in the stock, or breadth. So it's ticking quite a few boxes here as a bullish candidate. So with a stock like Walmart, it's a blue chip stock. This is a great underlying stock for trading cash secured puts. I'm just going to quickly go and check the main stock page. We've got a really nice strong buy signal, 88% buy, strongest short-term outlook. So that's good. I'm going to scroll down, look at when the most recent earnings was, and that was in May. So the next earnings are likely to be mid-August. So I know if I trade the July expiration, I won't have any earnings risk. But if I trade August or September, I am potentially going to have that earnings risk. That's not necessarily a bad thing, but I just want to be aware of it. I'll also scroll down and just have a quick look at the implied volatility percentile, which was also on our screener results, but I can see here 38% IV rank of 20. It's a little bit low for selling options, but it's still acceptable. The main driver of a naked put trade is going to be the delta anyway, so volatility is kind of a secondary consideration. We're also seeing really strong analyst ratings, so very, very good bullish candidate here. And the last thing I'm going to check is just the expected move. So if I go over here, we get a nice little graph here of the expected move. I know the earnings are probably going to be around this August date, even though they haven't been confirmed yet. I know that August expiration is probably going to have earnings risk. And for a wheel trade, I'm probably going to look at, I usually go a little bit longer term to make sure I'm generating enough premium. So I'd probably look at August or September expiration. That does mean I'm likely to have earnings risk, but for a quality blue chip company like Walmart, I'm not too concerned. and we can actually get higher premiums anyway when there is a bit of earnings risk. So I'd probably look at something like this, and I can see that the expected move on the downside for that September expiration is around 89. So I want to try and put my naked put down around that level if I can. I may have to come a little bit closer in because it's quite a low volatility stock, but let's have a look. So on our naked put screener, I'm going to first just change to September expiration. And from here, if I look at the 90 strike put, we're going to be generating about $1.74, and the return is about 2% in just under 3 months, or about 8% annualized. That's a little bit low. So to be honest, I'd probably move into this strike, the 92.50, which is inside that expected move, but I'm generating a 10% annualized return if it expires worthless. For a stock like Walmart, I want to be looking at about a 10% return. If I was trading a higher volatility underlying, I'd be looking for a much higher annualized return. But because Walmart's such a stable, low beta stock, about a 10% return is pretty good. So we've found our first bullish candidate. Let's go back to our stock screener. And in addition to the 20-day moving average screener, I have basically the same screener to see stocks that are breaking above or below the 50-day moving average. Again, I'm just going to get a general feel for the market. Again, we're seeing more buyers than sells, so a strong market. And then if I filter by call volume, getting a sell on Google, a buy on Walmart. So again, that's good. That's confirming our trade basis, and a buy signal on ANET. Let's take a look at ANET. And if I go to the options flow, even though it was breaking above the 50-day moving average, we're getting slightly negative flow. So maybe I'll look for a better example. And just scrolling down the list here, Costco is a good buy. Let's take a look at that one. And we'll check the flow. Very bullish flow here on the breakout. So that's confirming our bullish bias. Let's go and have a quick look at the chart. So here we can see the breakout above the 50-day moving average on a very bullish candle. And we've got a pretty strong accumulation distribution line, and we had strong options flow. So that's a great bullish candidate that we've just found. If we go back to the main page, you can see we're on a buy rating, strengthening short-term outlook. Earnings were in May, so we know the next one's going to be end of August. So we're good for July expiration with no earnings exposure. IV percentiles are a little bit low, but again, I'm okay with that. I'm still going to look at a bull put spread. We'll check out the expected move. And the expected move for the July expiration is basically 970 on the downside. So let's go and have a look at our vertical spreads. And the bull put spreads. We'll change our expiration to July. And we wanted our short option to be about 970. We're getting only 980 here. So I'm just going to change this from default view to show all. And I'm going to set leg one at 970. So that's going to be right around our expected move, or just outside. Now, some of these spreads are quite wide, as you can see, 970 to 890. So they have a big max loss. So I'm just going to filter for the smallest max loss. And for a vertical spread, I typically want to achieve about a 10% return. So this one's probably not enough of a credit, 20% credit over 480 risk. It's a little bit low. Whereas this one's got nearly a 15% return potential. We're generating $130 in premium over 870. So that's probably the sort of thing that I would look at. And we can go over here and click on this little icon, and it will bring up our profit and loss chart. So we can see we're generating $130. That's our max profit, provided it stays above 970. And we've got all our other stats at the bottom here. If you're interested, you can also check out some of these other tabs. The Greeks, the expected move, volatility, and the trend are also good to look at. So there's our second bullish candidate that we've found pretty quickly using the stock screener, options flow, and the snapshot chart. Let's now try and find a bearish candidate. And we'll go back to our screener. And Google was a sell rating. We'll go and dig into this one a little bit more. We've got earnings after the July expiration, which is good. And our options flow for the day was quite negative. So there's a good potential bearish candidate. Let's just confirm that by looking at the chart. And we can see here the stock has put in a lower high. Now we're breaking into a lower low. And we did just briefly break below that 50-day moving average, closed right around it. And we're seeing quite a bit of distribution, particularly since early May. This line has been trending lower, even though the stock's been going up. that can indicate weak breadth, potential selling going on into the rally. So I think that's a good bearish candidate. Let's take a look at our expected move. And we want to go with that July monthly expiration because we know that's going to be before earnings. The upper price range in this case is about 174. So we want to make sure we put our short strike above 174. So let's go to our vertical spreads. And the bear call spreads, change our expiration. And again, our closest short strike that we're getting is 170. So we're going to just switch to show all. And we're going to set our strike at 175. There's a $5 wide spread. We've got a 5.8% increase to our break-even price. We're generating $77 over 423 risk for about an 18% profit potential. So that's a really nice candidate. Again, we can look at the chart, profit and loss graph. There's our max profit, 77, provided the stock stays below 175. So there's our bearish candidate that, again, we found pretty quickly using our screener and some of the other bar chart tools. Going back to our screener, I've got one last moving average screener that I look at, which is the 200-day. And we don't get as many signals here, but again, it's good to get an overall feel of the market. We'll sort by volume, and we can see here XOM was giving us a sell signal today, so we'll look into that one. So potential bearish candidate, we'll go to the flow. And we had positive net trade sentiment, but negative delta imbalance. So maybe an avoid for now. We probably can find better candidates. But again, that's just sort of the process I'm going to go through in terms of finding bullish and bearish trades. Let's go through some of the other screeners that I use. And I've got this one called Barchart Opinion, which is basically just very simple, looking for any stocks with good call volume with an overall buy rating greater than 1% and a market cap above 40 billion. So pretty simple parameters. And again, I'll sort by option volume. I'm going to get the highest liquidity stocks here at the top. And one that caught my eye here was Robinhood. So we're going to drill into that one a little bit more. It's been a very strong stock. We'll go to the flow. And we can see, even though the stock was down on the day, we had very strong bullish sentiment and a positive delta imbalance. So that's a really good bullish candidate. We can also see here lots of green, which is bullish flow, and the red is the bearish flow. So we're getting more green than red, which is good. Let's have a quick look at the chart. And again, we can see here a really nice trend, nicely uptrending moving averages and really strong accumulation. So that's a really good bullish candidate. And to show you an example of what I'm looking for here with this accumulation distribution line, we're seeing here a really strong line with hood as the stock is rallying. So that's indicating underlying buying strength. Whereas if we look at a stock like AMD, we can see good price action. The stock's rallying. We're actually seeing significant distribution. People are selling the rally here. They're using this rally as an opportunity to get out of the stock. So for me, that would mean not going bullish on this particular stock. I'd prefer a stock like Robinhood that is showing positive flow, positive accumulation. So if we go back to Robinhood, we'll just go back to the main page here. We've got a really strong buy rating. We've got earnings in August, so we know our July expiration won't have any earnings risk. IV is a little bit low, but again, I'm not too concerned. Delta is going to be the main driver of profit on loss on the trade. And we've got pretty good analyst ratings as well. Going to the expected move. For that July expiration, we can see the lower price is 68. So let's go and look at a bull put spread for that July expiration. And I'm going to show all. And we want it to be below 68. So I'd be looking at sort of this 65 strike. That's a good one there, 65 as the short, 60 as the long. We've got a huge decrease to our break even of 15%. We're generating $53 over 447 for a potential return of just under 12%. So that's a really good candidate there that we've found on a bullish stock, a bull put spread that's outside the expected move. Let's go through a couple more of these scanners. Another one I like to use is the top 1% buys. So again, this is just looking for the top 1% of stocks according to the Barchart opinion, good call volume and large market cap. And we're not getting too many here, but Zscaler was one that caught my eye here. It's been a very strong stock as well. We'll go and check out the flow for this one. Again, very bullish flow, bullish delta imbalance. So that's ticking that box. We'll have a look at the chart. And again, very nice uptrend, very nice accumulation. So that's a good candidate. If we go to our price overview, highly rated earnings are going to be at the end of August, so we know there'll be no earnings risk in July. Now, our volatility is very, very low, so I probably wouldn't be looking at a credit spread here. You may want to look for something like a bull call spread, so a debit spread in this case. Let's first have a look at the expected move. Now, with credit spreads, I like to be reasonably short term, 1 month or so to expiration. But with a debit spread, I'd prefer to go into that sort of 3-month range to give myself a little bit longer for the trade to work and to also minimize the impacts of time decay. So I'd probably look at something like the September expiration. And we can see the upper expected move is about 350. And we know we've got earnings in the end of August as well. So these options should hold their value pretty well because the implied volatility is going to stay a little bit elevated. So if we go over to vertical spreads, and this time we're going to look at a bull call spread for the September expiration. And we know the expected move on the upside was about 350. I want to put the long strike just a little bit inside that expected move in this case. So here's an interesting one to look at. September expiration, going long the 340, short the 350, and really nice max profit. So max profit of 655, max loss of only 345. So a bit of a different risk reward ratio than we would see with a credit spread. If we have a look at the risk graph, you can see here risking 345 for a potential max profit of 655 if it gets above 350, which was right around that expected move. For my cash secured put trades, I'll sometimes look for blue chip stocks that pay a decent dividend. So let's go through another screener I've got here, which is a naked put candidate. And in this case, I'm looking for a stock with a dividend yield above 2.5%, an overall buy rating, and an IV percentile above 20, price between 30 and 150, so it's not too expensive if I do need to buy the stock. And again, good call volume and a large market cap. So let's have a look at the results. And let's filter by call volume to see the most active. And we've got a couple here, Citigroup and Coca-Cola, Verizon, a couple of bank stocks, Morgan Stanley. So Coca-Cola is interesting because it's got a very high IV percentile. So we're going to be able to generate a lot of premium there. So let's take a look at that one. Let's have a quick look at the chart. Now we are below some key moving averages, but we're just in a nice little pullback here. And this is more of a fundamental play where if I sell the put and I get assigned and I have to buy the stock, I'm pretty happy because it's a blue chip company, pretty low risk. And I'm just going to sit back and collect those dividends and maybe sell covered calls against the position. So let's go and have a look at our naked put ideas. Actually, first, let's look at the expected move. To generate any decent premium, I'm probably going to have to go out a couple of months for a low volatility stock. So I'll look at September. Expected move on the downside is about 65. So we'll go to our naked puts. September expiration. And that 65 put is 7% out of the money. When we include the premium, it's actually an 8% decrease to our break-even price. Annualized returns a little bit low at 6.2%. So I'd come in a little bit closer in this example and go try to get closer to that 10% return. So the 67.50 strike, still 5% out of the money. So if the put expires worthless, I get a roughly 10% annualized return. If it drops below 67.50, I get to buy a quality company for 5% less than what it's trading at today. So I'm pretty happy with that one. Let's take a look at a couple of other screeners that I also use. And I have this one called large cap candlesticks. So again, looking for high option volume, good market cap, and I'm going to look for bearish engulfing candlesticks. Filtering by volume, Oxy is one of interest, and XOM. If I go and look at the flow, had a pretty negative day and negative flow, so that's a really good bearish candidate. I could look at the chart just to confirm. And yeah, big bearish engulfing candle there. And we're seeing a lot of distribution happening in the stock. So there's a good bearish candidate. Now we've got lots of different candlestick patterns that we can look for here. My two favorite, the bearish engulfing and the bullish engulfing. So let's have a look at the bullish ones. And again, a couple of good candidates here. AVGO, let's have a look at that one. And we'll look at our flow for the day. Again, very bullish flow, so that's good. Looking at the chart, really nice uptrend. It's riding that short-term 20-day moving average. and we're seeing pretty strong accumulation, particularly since the low in early April. We're seeing a lot of buying pressure. So again, another really bullish candidate. We'll go back and we'll look at Uber as well. In this case, we're seeing significant negative flow, even though the stock had a good day and put in a bullish engulfing candle. So I'd prefer to go bullish on a stock like AVGO rather than Uber in this example. Let's look at one more. And I'm going to go down here to Snowflake, options flow, very bullish. So here's a really interesting one from the bullish side. Very, very bullish flow, plus the bullish engulfing candlestick pattern. Let's have a look at the chart. And here we see another stock that's in a really nice uptrend and a very, very strong accumulation distribution line. So people are buying this rally, and this looks like a really good potential bullish candidate. Now, one thing with a stock like this, the IV might be a little bit low. We've got a very low IV percentile and IV rank. So rather than a standard bull put spread that I would normally look at, potentially look at something like a bull call spread. Two last screeners that I'm going to share with you is upcoming earnings. And here I'm searching for stocks with good volume, high market cap, and earnings in the next week or so. Not really many at the moment, so I'm going to stretch this out and look till sort of mid-July. And I'll just sort by earnings date. And we can see here some really good large cap stocks. These are all pretty good for trading options. And they've got earnings coming up. So if I was looking for a specific earnings trade, I'll use this screener. So we've got Micron later in the week. Let's have a look at that one. And it's in a very nice uptrend, but we've got slightly negative flow, so I'd probably avoid that one. Let's have a look at another one, Citigroup. And that has good options flow, slightly negative on the delta imbalance, but that's probably a better candidate on the bullish side. And then the last screener I'm going to share is a simple screener for stocks with high IV percentile. I want to avoid anything with earnings in the next 45 days. If I'm going to be looking for a neutral trade like a Condor, I generally don't want to hold that over earnings. So here we're getting stocks with good call volume and a high IV percentile. And some of these could be good candidates for an iron Condor type trade. So there's a little bit about my process that I go through each day and how I find trade ideas using Barchart's stock screeners and some of their other functionality. If you enjoyed the video, please like, comment, and subscribe. Thanks for watching and have a great day.